Probably more excited, though, by the fact that gold is through 4,000. Mark, what's next?
I am excited by gold. I'm excited about what's happening on the stock side. I'm also excited about what's happening on the French side at the moment. I think there's a little bit of nervousness creeping into the market. Not on the gold side, clearly. That's one of the most consensus trades out there. Anecdotally, I'm hiring at the moment. Whenever I interview any candidate, their top trade seems to be bullish gold. So it's definitely completely consensus out there. But I get why. We're seeing a debasement trade. We're seeing an underminement of fiat currency. We're seeing an attack on institutional credibility. I can see why gold is such a popular trade. When it's so consensus, it's a little bit worrying, but it's hard to fight against it. On the flip side, what I think is probably where there is nervousness in markets is back to the idea of fiscal concerns. And I think we've had France and Japan in the radar this week. France will stay on the radar today, very much so.
Yes, so fiscal concerns. We're also concerned about the tech sector. At least in the last 24 hours, Mark, we've rediscovered our concerns around valuation, around ballooning AI spending, the circularity of some of the deals being announced. Is there anything new in this? Any cracks that you think could sort of linger in the market psyche?
It's a very hard one. I think it's very tempting for people for the last few months to kind of go, hey, these stocks are overvalued and it's a bubble. And I think we all have been talking about that for months, and we know that. Just where we are on this bubble, where are we on this parabola of kind of gains? I am still worried that we're kind of at I won't say early, but we're on the way up. Now, on the way up in bubbles, you sometimes get increasing volatility. That doesn't mean it's a straight line up. But I'm not sure that we're going to see the catalyst just yet to pop this bubble. I think we only see that when we start getting realization that we just won't get the revenues to justify the incredible capex. And that might be a quarter to away. But maybe what we're seeing on the sentiment change, what we're seeing in terms of what Oracle said overnight, what we're seeing in terms of those circularity stories of all these big AI-themed companies all investing in each other, is that we're going into the more volatile stage. So it's the latter stage of the bubble, perhaps. It's the beginning of the end rather than the end of the beginning. Have I got that the right way around?
But Mark, as stocks start to stutter, as gold tops $4,000 a troy ounce, you say there could be a case for a year-end dollar rally?
Yeah, very much so. And I think this is one of the things, even gold is the most consensus trade, and I completely get why. I am loath to jump on the gold bandwagon here at these levels because obviously the two biggest dynamics going into the kind of marginal gold value are real yields and the dollar. And I do think the dollar is ripe for a bit of a year-end rally, mainly because its main competitors around the world are all being undermined. That's the euro, that's the yen, Canadian dollar. So all these key currencies, there's fresh bearish reasons. So dollar will rally by default rather than its own strengths.